All right, so just to give you a brief rundown of how I chart every single time or every single stock as well is, um, let me first clear this drawing set if it will allow me to. Okay, perfect. So I'm going to just remove my indicators. Okay, so it's a nice clean chart. So obviously top-down analysis always start from the bigger weekly candles or even monthly if you want. And then work your way in weekly, daily, 1 hour, 30 minutes, and work your way down to kind of find those supply and demand levels. So for something like Apple, right? Remember two drawing sets of how you want to start visualizing your support and resistance levels is quick rejections, okay, or a lot of touches like this, 1, 2, 3, 4, rounds of sellers pushing this down. So it obviously gives you some confidence that this is a pretty strong resistance level, right? And this would be a decent support level because we had a huge rejection to push this up from where it was at around $53 per share, which who knows, Apple will probably never go back down to those levels, but it's good to visualize and chart to just to give yourself some practice, right? Train your eyes and whatnot, and continue to do this, right? Quick rejections here, right? Draw it here, same with over here. You can work here. So some people, they don't want to get too I guess overwhelmed when looking at the charts, so they work by left to right, which might help you as well, right? Left and right from the top, left and right to the bottom, just to kind of show you where or make things a little bit less complicated and less crazy when you look at your charts. And of course, remember these price levels again are not based off the actual number itself, right? I just do this because I'm experienced enough to understand that I will respect these as an area, as in a zone. Okay, if it was to the T, to the actual decimal point of each price, it would be way too easy, and the marketplace is just not set up for that. But this is just for you to understand where buyers and sellers stepped in very strong based off, the weekly chart, right? Remember, weekly chart is an entire weeks of action. So it gives you more strength or confidence in terms of understanding these supply and demand zones. We'll continue to draw these a little bit. Again, it's going to get a little bit hectic if you're new to it. But of course, this is really good practice to kind of understand these kind of price levels as you trade on a smaller time frame, right? Now, we're going to still stay on the weekly chart. And what we're going to do here is we are now going to try and find two things: trends or chart patterns, right? Things that look very clean to your eyes where you can kind of visualize, okay, hey, it looks like, this is a current uptrend that we have in Apple. And I want to draw that on my chart so you can start to visualize it, as you're looking at it from, a different time frame as well. You'll start to identify like, okay, hey, Apple continue to respect this uptrend until it finally broke through. And then buyers did, however, push it back up after we fell close to 20% down from there, right? So things like that, you start to look at. If I'm still on the weekly chart, zooming in a little bit, nothing else is as clean. However, there are like, minor things where you can start to draw just to adjust your eyes and train, right? This was a respected resistance line, right? A level until buyers squeezed through this apex, push this up above the pivot, and then we had a huge squeeze on the weekly. Things like that, right? Start to chart, try and look at them and see. And then after that, we go to work our way down to like a 2-year, 1-day chart. Okay, obviously we're going to be missing all the other previous historical price action of what we saw before, but that's okay. We don't necessarily need it now. But if and when that time does come, so meaning if Apple just plummets and we draw back around $60-$70 per share, at least you already did your due diligence or your charting for your homework and understand that, hey, these are price levels that I need to respect. Now, on a 2-year, 1-day chart, as we kind of, streamline and get more and more integrated into the current price action, I want you to start understanding that you want to look at, you know, and it's going to be very difficult in the beginning, but you want to look at the shorter resistance and support levels of where it showed some level of, you know, indecision or whatnot. And I like to change it to like, you know, like a blue color, right? If you're a little OCD, but it does help as you are chart or trading on a smaller time frame. So similar over here, do this as well. Go blue. Okay, you start to understand and look at this. So obviously, if you look at this previous 176.42 rejection, right, off a smaller time frame, you'll notice that we had rejections already appearing here, okay, in the past, right? So based off this data, you'll understand that when, if not you understand, but you have the odds, you have the probability that if we ever came back to this area or this to this level, that we should expect some sort of indecision or huge rejection or something. Usually that happens and we don't just necessarily ignore it and then blast off. Okay. So for that would have been a nice key level to play the downside, right? Huge, nice bottom wick here. So you understand how things are moving. Let me remove that 14 just to show you. Also, I'll change this to a blue. So now that you kind of start to understand where you want to draw these levels, right? You can draw one right here too. And again, it's going to get a little bit messier as time goes, but you start to see how respected this particular top-down analysis strategy is. Because if you're doing this on a larger time frame, right, bigger the marble jar, more accurate or more strong the data is going to be, the more confident you will feel when you are trading. Okay, so change this to blue as well. And again, you just look at it. Rejection here, rejection here. Guess what happens after we bounce back up? We see another rejection here. Even when we start, even if you ignore all of this data and we continue to break out here into higher highs, we had rejection here already on a smaller through that day. So it plays into part of how, if you want to scalp or day trade, using this top-down analysis, right? Now, for something like Apple right now, you know, again, you can also draw the trend lines that you see fit, right? There was a big one, I think it was from right here that we see. What do we notice when, or what do we say when things are aligned in the way, right? We say trend is your friend until it's not. So obviously this trend line was respected, 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 and it continued to have this upward trend, which obviously you do not want to be the hero and play the downside until we see it break. Now, remember by textbook, right? We have a break out or break down in this scenario. We nice retest of that potential, you know, trend line that we have now that's acting as resistance, and we had a huge flush on Friday. Okay, so something like this, just to like chart, just to start understanding, it plays a huge factor. Now you might say, okay, look, Chemo, where am I going to potentially enter to the downside now? Right now, I'm literally zooming in on the daily chart right now. Okay, still looking at Apple, rejection from sellers until we finally broke out very strong. Okay, consolidation, broke out. Now that we had our second leg down right here, we closed literally at this area where we saw a lot of indecision from buyers and sellers. However, because we are still above this particular level, you want to assume or expect that, okay, you don't, or not expect, but you don't want to necessarily be biased in any direction yet. You want to wait for confirmation. Okay, so for this particular matter, since we broke out and now we are headed back down at this current price level or price area, you want to consider this might be a retest. Okay, and then we maybe consolidate something like that, or and then head back up, or a bounce, consolidate, and then head back down. You don't know yet, right? You just have to start building a game plan to give yourself an idea of what you will do if and when XYZ happens. So for this particular scenario, like I told you, once you go back on a smaller time frame, you'll know, okay, hey, since we see so much indecision here, we expect something to happen. So if we were to break below this 163.62, you would want to look to play the downside. Okay. Now you're going to see, okay, if I'm going to play the downside based off that, and let's just say it works in our favor, selling pressure is continuing to pick up. We have a huge continuation to the downside. You want to continue to look at the next levels of where we saw buyers or sellers show some sort of interest. So what I would use for this 163.07, which obviously, if you know how to trade options, a 50-cent move quickly can be very, very profitable. But this would be considered your first price target. Okay. Well, I would consider this as my first price target as I am trading, day trading, scalping. Okay. Now, if you're looking at this portion, you're understanding, okay, what happens if you collect profits and you still see downward movement, downward pressure? Okay. Then below this 163.07, you start to visualize and see where the next level of potential, interest is. So that could be benefited in terms of your next profit target. Profit target 2s, profit target 3s that we continue to bleed. Of course, remember, as retail traders like you and me and everybody else, or most of the people, our job is not necessarily try to catch the tops and bottoms, even though it's going to happen from time to time, and that's when you feel really good about yourself. But you want to make sure that you're focused more on understanding your risk management and your position size. Meaning, if let's just say it worked out in our favor, we scalped it here, we're still in it, we're pushing down lower, you're up 100, 200% return. You need to be like, okay, hey, as soon as I see some sort of, reversal imminent or whatnot, because remember, the marketplace, the stock market, everything is set up not for you to win so easily, right? So in most cases, what I like to do is if I have something, a clear direction of playing the downside, it works in my favor, I'm up a lot. And then it's getting very close to my next area or level of where I see, okay, a bounce might happen or a consolidation, right? Then that's when I'm going to try and collect profits somewhere before it hits that level, because you know how premiums go. If you're trading in the right direction and it goes in your favor like that, delta, everything, gamma, everything pushes together, your premium pops. And sometimes if you just catch that huge flush candle down, you can profit more than just holding and waiting it a little longer and then catching like a consolidation or a green candle up, and you're like, oh shit, I should just got out. Okay. So that's one thing too, but this is how I'm visualizing and I'm charting Apple here. Now, of course, after you chart Apple like this and you understand this is the game plan I have for the week right now, or for tomorrow, let's just say, right? Because this really is. Okay. You have to understand that going back into your smaller time frame now, that here, let me remove my active trader on the bottom so you can see it a little bit better. Remember what I just charted on the top-down analysis on my daily time frame. Now I'm looking at it on a 15-minute chart, and you can see all of my levels that I've just drawn for you appear on my smaller time frame. So this is how I can monitor and look at what I charted in different colors, because you're a little OCD, but now you're telling what I'm doing is I'm telling myself, okay, this is a stronger level of a support and resistance, supply and demand. Okay, my yellow ones, the blue ones aren't as strong, but the green ones would be my price target, okay, of where I'm wanting to trade in that direction. Now, of course, the game plan, the setup is just for you to prepare for the trade. It doesn't necessarily mean that it's going to happen, but your job as a probability trader, or having the best odds, is that you want to prepare to execute like the way you're setting it up. Because if and when that happens, all you got to do is click a button, play out your scenario, play out the way you want to trade it, because that's what you did your due diligence on, and all you do is you execute on that, right? Of course, you might say, okay, now with that it's going down or whatnot, how can I, make sure that I continue to profit or whatnot, right? That's where you can start to understand, leaving runners. You can start to kind of put into perspective of, okay, like I'm not going to necessarily risk so much, because I might want to enter a starter position, so that if you're entering a starter position rather than your entire port, or a big chunk of money that you don't think your risk profile is actually okay with, then you would be able to trade a lot easier and you would be able to kind of manage your trade a lot better as well. Okay. Now, going back into this, right? Obviously, when Monday comes tomorrow, my day trading levels, my 5, which is the pre-market high, previous day's close, pre-market lows, and the previous day's low, are going to switch. It's going to completely change. This white line where it closed on Apple is going to be my previous day's close showing on Monday. And this right here, this line is going to show my dotted green line, which is my previous day's high. And then this previous day's close and previous day's low, the dotted red line and the white line are going to align together or be very close together, because that's exactly where it closes, right? The pre-market highs and pre-market lows, you're not going to have that data yet. You're going to have it tomorrow morning. But though it's going to show you, let's just say it shows something like this, right? This is your pre-market high, is your pre-market low on the bottom, right? This is your previous day's close, and this is your previous day's high. Now you can start to adjust based off what you did on your top down, right? Because this is your first profit target. If we were to break this, right, and we also break your pre-market low and have another continuation to the downside, you now what? Understand that you have a profit target, a price target to play if we continue to sell off, right? It's not showing here because it's a little further down, but going back to our top-down analysis chart, it would be this green line, green area. Okay. Now, of course, remember, like I said, based off how the marketplace moves, it's very possible we don't just flush down tomorrow and have a continuation. This could happen, a bounce, consolidation before we have another leg down. But for you to set a price alert, right, would be somewhere around this area below, because once that triggers, your phone, your computer will alert you and tell you, okay, hey, it's breaking down. You want to look at it and see if you want to enter the downside. And if and when that time comes, that is when you want to execute. A lot of people, they'll see this and they're like, oh shit, I want to enter Monday. I need to enter now. No, you need to be patient on the entries, because once you get there, you'll understand, okay, just in and out, less fatigue, less emotional trading, and just understand how the price action is for this particular candle, right? Now, another thing too is after I do all this charting, now I have a game plan. Sometimes I go into my different studies. I'll literally load. I have a bunch of studies that I've loaded in my charts, and I can look for some validation, confluence, validation bias and whatnot, just to kind of give myself, okay, I see this there, I see that there. Where is it a better place to maybe potentially enter and exit? Now, this is what I call the Bollinger Band. Well, my BB finisher is what I nicknamed it. But looking at this, right, I do also suspect Apple to have a downside here, right? There's more downside left for Apple, okay? Looking at RSI and whatnot, obviously we saw a slight divergence, which we saw on the RSI. Crossover MACD, cross down on stochastic slow, and that's what's happening right here. We had the retest, and then we had a huge flush down. But based off this Bollinger Band theory, or my strategy itself, I do expect Apple to have some more downside left before we see a significant bounce. Okay. And of course, going back into different study sets, right? Let's just use like the EMA, SMAs, and whatnot, right? That exact same correlation, just to base off, okay, is it following the same thesis that I'm actually trading at, or is it following the opposite thesis of what I'm thinking of? Right now, obviously, we are thinking it's going to continue down, right? Looking at the EMAs and SMAs, or this is my SMA right now. So my yellow one is my 100 moving day, okay, and my orange one is my 50 moving day average, okay. Obviously, this is showing different based off how we are wanting to trade to the downside, because when the faster moving average crosses the slower moving average, it shows that, hey, we are slightly bullish. Okay. However, remember, SMAs, EMAs, lagging indicators. Okay, they develop once everything is completely and finished. So we might see maybe a small bounce tomorrow or two, or maybe a couple days before we potentially may head lower. But of course, this also shows that, okay, it doesn't necessarily validate what I'm looking at just based on my price action. However, there are other variables that do complement or do suggest that the downside play is more imminent, right? And now you're just pretty much looking at probabilities. Okay, now we're going to, you know, let's just say clean charts with some my subcategories. Just looking at strictly in price action, the only price breakdown of where you want to potentially enter Apple is based off that 163.62 area or whatnot. Now, another thing too is you can also, and what I like to do every weekend and whatnot, I go back onto the Discord channel. Okay, because now you just charted Apple, and remember what I said, you're looking for multiple validation points now, right? You can Control F, Command F. Now I'm looking at Apple now. Of course, you always want to do your charting, your due diligence first before you even look at what other people are doing. Okay, you don't want to have a bias based off what you read, based off what you see prior to you actually doing your homework, doing your due diligence. Okay, because that's just not right. Okay, that's not how you should trade, because you're if you were to do that backwards, as in look at like option flow, which we're looking at right now for Apple, and then you start to chart, you're going to be biased when you chart, because you're going to be like, oh, it looks like these guys are going to play the upside, so I'm going to try and chart it to the upside to see where that bullish idea is, right? But of course, because we did our charting prior to looking at our Discord tools, right? We'll notice that, look, hey, institutions, they also want to play the downside with me. So now it's not you trading with the institutions, right? You do your homework, your due diligence, and now you're looking at other people to match what you charted, what you've done, which obviously right now it looks like it does align, right? And how you should look at this is based off the expiration dates, okay? 10/21, October 21st, 160 puts, right? 500 contracts. They spent about $282,000. Yeah, it's about a month out or whatnot. You know, premium is substantial in a way, but it's not a strong like I know this is gonna happen kind of thing, or like I know I have the nuts in poker kind of thing. It is more like, oh, let me just manage my trade, you know, put some here because I also do see some downside. Right now, you also want to keep in mind that these guys are not going all in. These guys could be large hedge funds or whatnot that have millions or maybe billions of dollars to play. So this minor $282,000 might sound a lot to you and me. However, for them, it might just be like a FU money kind of thing. Like, I'm willing to play the downside because, you know, it looks like we're gonna go down, but whatever. I can leave this 280K and then blow it, right? So always keep that in mind. If you're looking and scrolling down, look at the date, look at the Apple. We have puts, 150 strike, 150 strike, 160 strike, 145 by October 21st. So looking at the strike now too, you want to suggest that, oh, wow, these guys are buying what? Out the money contracts. They're buying further below, right? Which means that they have a slightly stronger conviction that it's going to go down than up by October 21st. Okay. And that's how you should continue to use this, right? Obviously, if you're using it, looking at another stock, you can literally just, you know, Control F or Command F, and then, you know, look at, you know, the next stock. But of course, you have to do your charts. You do your chart, your supply and demand zones, top-down analysis, visualize your game plan first, where your potential profit targets will be, potential stop losses and whatnot. Have that game plan set. Then look into like validation theories and then try to find confluence, right? Because once you do that, you'll know, okay. Now you'll have major confidence to put your big boy pants on and say, okay, if it falls down below here, I feel confident to hold a little bit longer because I also see, you know, institutions getting into puts with me as well. Does that make sense? And of course, now that you know the strike prices that they are potentially aiming by, you know, October, somewhere over here, they're aiming what, 150s. I saw 160s right here. 150 is right over here. That 145 was right here. That's a huge move down right here that some people expect to happen, right? So of course, if you're scalping or day trading, though, you don't need to catch all of this, right? As retail traders like us, it'll feel nice. It'll be good to catch it, but just catching a flush or a huge move here down and whatnot, honestly, doing this entire setup over and over again, you can probably make, you know, someone's monthly income in a day, right? It's absolutely insane once you start having a perspective of just the tiniest moves with the highest probability to catch. And then when you are able to continuously look at these and catch them, right, you can be a consistent trader. But aside from that, that is pretty much the basis of how I'll chart and whatnot and how I look at things. For something like a blue chip stock like Apple, obviously you don't need to really boil down into looking at volume and whatnot, because it's very liquid. There's a lot of interest and whatnot, people trading it. But of course, if you dive down to the other stocks that are maybe less liquid or less interest, not a blue chip stock, then you might want to look at you might want to go into the auction chain, look at what the open interest, the volume, right, and the bid ask spread, right. That's going to give you huge insight to see where institutions are also and also where other people are wanting to trade this, right. Obviously, Apple is very liquid, so you're not going to catch a huge eye like boggling kind of contract as like, wow, there's like 100,000 people that are in this 3 weeks, 3 months out, like, or somewhere here. You're not going to find that, right, too often. But if you do, right, you want to maybe scroll down, even open all these contracts, right? October 7th and whatnot, when we, October 21st, right? Go further down to leaps and whatnot, right? You'll notice that there are huge open interests, right? In some of these contracts with these strike prices, and you can even go back and backtest and look at the option flow, right? See those and match those contracts with what you see on your platform, because sometimes that you'll notice if they closed it out, if there's a higher volume, or if they kept it open, right? And that's going to be something that's critical too for you to want to look at. But again, like I said, for something like Apple, if you have a game plan, which we already do, right? It's liquid enough. Institutions also want to trade the downside with you. So now that your signal or your entry point of when you want to enter is based off your top down. I'm still on my daily chart right here, is break below previous day's low. Any trigger from there, I would like to play the downside. Okay. Any trigger back up, and if let's just say you did not collect profits because you got a little greedy and then a huge buying pressure started picking up, you need to tell yourself, okay, hey, it is what it is. I got to get out now, right? Because you can always re-enter a trade. You do not have to, just because you enter a trade doesn't mean you have to exit at maximum profit or whatnot. You have to continue to play what you see and how you visualize and what the stock market is giving you. All right. Something like Friday was, obviously a blessed day for shorts, but you won't get this type of action every single day. So at the end, you still just need to manage what is your, I guess you could say, investment goal, trading goal, profit goal, because once you can, consistently do that, that's all there is to it. Do you have any questions?
No, that was pretty clear. So I mean, go back to this Apple chart, right? Like you said, if it doesn't break below the 163, then we just wait, right? We don't try.
Yeah, you can wait. Yeah, you don't have it. Like I said, it won't happen. It could happen tomorrow, right? If it happens tomorrow, it's perfect timing. You have the setup for you. Everything is there. It's literally perfect. But like before in the past when I traded Boeing, right? I tried to time it. It didn't. I entered prematurely pretty much. And then it took me like 3 days of just fucking mental exhaustion, fatigue, because I was just like, fuck, like when's this move gonna happen? Because it was after a big move down, what it did? It literally just went inside days.
Yeah.
Right. And I was like, oh my God, I know it's gonna break. I just gotta wait for it, right? When it does. So I could have just not entered and then wait until I got that confirmation and then play the downside. But instead I entered prematurely because I saw it consolidate and I thought it was just gonna dip down, because it's obviously greed comes into play, because he's like, oh, if I enter now before it happened, I can profit an extra 10-15% more, right? You get, the greed, it comes into play. But because of that, it was like 3 days, and then on the 4th day it finally broke. But after these 3 days, it's like Monday, Tuesday, Wednesday, I'm like, holy shit, like, you're just very fatigued, but you're like, thank God I got it on profits. But it just wasn't a nice way to manage that trade in a way, because if that didn't happen to me and theta kept fucking me because I wasn't patient, I mean, hey, I might have maybe just barely broke even when it finally flushed down, right? Or be in very small profits because I was entered prematurely. Does that make sense?
Yeah,
And something like with the options contract and how you want to choose, how I said it before, you can trade weeklies if you really want to dabble into it, but I really don't suggest it. Just trade a couple weeks out, even though you anticipate the move to happen very soon. And if you're comfortable with, like 20-30% return, which you should be, you'll still be beating the entire S&P, broader market and whatnot, right? As long as you don't get greedy and try to go big and weeklies and then you get fucked and it's like, wow, you had the right play, the right setup, you just had bad execution because you got greedy. You chose to trade weeklies where it was like, okay, you weren't sure if it was going to happen this week, but you just knew that, or you had a high probability that the move was going to go in your favor. Does that make sense?
Yeah.
So again, you can buy 2 months out, 3 months out, right? Go heavier, it's fine, right? Because data won't fuck you as much, but and holding a couple of days of consolidation won't hurt you as much at all, pretty much. I don't think either. But once you have that move in flesh, yeah, you're not going to bank 2, 3, 4, 500, 800, 9,000% returns because you're not trading weeklies, but you will still be clear-minded. You still can develop yourself as a trader, right? Because that's where that's why you're here, to learn and whatnot. And you're not emotionally forced to get in or get out of a trade because you're trading weeklies because you're scared that your premium is going to go bust. Okay. And that's a big thing that everybody does not or can't comprehend. They know it's there. They know that's the right way to do things, but they completely ignore it based off human error, I guess you can say, because we all want to capitalize and maximize our capital every single time. So it's hard for us to just say, oh man, it's gonna happen, but I want to be a little bit more cheap, I guess, in a way, because you want to buy cheaper contracts rather than paying a little bit higher premium for that safety net. And that's where it destroys a lot of traders, right? Especially the newer ones. All right, they start blowing up their accounts, and even then, it's not even they blow up their account. They have one bad trade, and then it emotionally snowballs them into making another bad trade, right? This entire setup for Apple right now is phenomenal. It's good. We have a short play right here. Okay, if it doesn't happen, hey, it doesn't happen. We still have a game plan. This is what we charted, right? If it does happen and we benefit and we capitalize on it, by the end of that trade, you'll be like, holy fuck, pat yourself on the back. Like, you caught this. You really caught this, right? Before it even happened, and you benefit, and then you can pay yourself, withdraw, whatever it is. But the biggest thing is don't compile and go heavier in size the next trade you do, because once you start getting emotionally confident, right, you get a little bit more euphoric, and that's when you also aren't going to be seeing as clearly, because you're going to get, again, what, emotional. You're going to be, you're going to feel good, right? Which you should feel good, but you shouldn't feel overly good. And anytime you enter a trade. Does that make sense?
Yeah. So, okay, sorry, quick question. So if you go back into that graph, right?
Wait, what's that?
Yeah, if you zoom in a little bit more on yeah, and then at the 160.8 mark, would you buy like a call there, because like that looks like people are like supporting it again?
Yeah, so that's again, there's many ways to make money here, right? You can either execute to the downside and then play it down, but let's just say you missed it, right?
Yeah.
So, and you want to potentially try and capture something, right? If it goes back to this 160.8, I would enter some calls, try to scalp it to the upside, right? Get in, get out. Just because that we might have some buyers start to step in. It might not just revert and go up like this, or it can. However, the probability of it, flushing down and then saying it's going to continue to go down is not likely. We're likely either going to flush down, get near close, have a bounce, consolidate a little bit, and head lower, or we're just going to bounce immediately back to up here and then head lower, or we can just revert and go up. But the likelihood of it just doing this is not high, which is why you can. So if you trade like me, I give myself 3 buys. One is when you want to have that best buy zone entry, right? Let's just say it flushes down, we gap down so hard that it was impossible for you to even capture this first profit target because we didn't open up flat, right? But we gap down so hard that we get around here. So this would be what your first buy zone to play the upside. Okay. Now, let's just say worst case scenario, it doesn't bounce as significantly as you want to, and now you're still holding. Okay, that's fine. That's your first ad. If and this happens and then this happens, this would be your second ad buy zone. So this is when you double your contracts, right? If you buy 10 contracts, you should buy another 10 here. Okay, you shouldn't buy any 10 here. You shouldn't buy 10 immediately when it breaks below. You wait until it hits your next buy zone. And again, you're buying calls now because you're trying to capture the upside, right? The bounce. Okay, your first ad, second ad, right? Now, for me to have the third ad, usually by this time, I'm not gonna lie, I'm usually already in profits or I'm break even right now, so I don't necessarily need to add yet. But you need to understand if it does break below these two levels, this could be your potential third and final ad. Now, usually off of this huge flush from this move here to here, and you have your third ad, not necessarily anything you need to really worry about because it will bounce, right? You might not have a significant return in terms of percentage, but you can, it's very safe to say you can get like a 30, 40, 50% return based off a huge amount of contracts. So it looks like a fat premium chunk that you will benefit on, right? Was the trade good in terms of, getting in and getting out, the way it wanted to play? Not necessarily, but that's how you managed your trade from the beginning. You were prepared to it not work in your favor. And, that's a game plan of it not going in your favor so that you can continue to manage and get into that position. Now, this would only work if what? You don't buy weeklies. You have to buy some time, right? If you buy weeklies and you average down here 3 times or whatnot, you are going to be fatigued. You're going to be losing hair because you're going to be like, holy shit, what the fuck am I doing? Like, you're like 1 day out for it to expire worthless and you might lose a shit ton of premium, right? A shit ton of money a capital that you just put in. So it only works if you buy a few weeks out, if you expect the move to happen in the near term, or even, I guess, like I said, buying more time never hurts. It never hurts. Okay. But, eventually as you get better as a trader and you start to identify, hey, this is my edge. This looks good. I expect it to happen in the next few weeks. Now you can start to kind of, your risk profile can be a little bit more aggressive. So if you can get a little bit more aggressive, then you can start to pinpoint and kind of forecast when it's going to happen a little bit better, right?
Yeah, I just want to make sure it's not like a hero call when I'm buying the call at 160. It's like
yeah, I mean, again, if you're buying the class at 160, yeah, I would try to buy as close as here as possible, right?
Yeah.
Again, when it gets to 160 or gets near here, you're not necessarily going to be looking at this chart right here. You're going to be looking at it on a smaller time frame. Now, when you're looking at a smaller time frame, and let's just say, for the scenario's sake, this is like 160, like right here, right? You'll notice that it broke down all of your key day trading levels, right? And it got to your 160 of where you want to add. That's good. You can add there. But let's just say you had your 160 was right here. You have a huge flush, and then you have like pre-market low, slightly below. You can wait and enter at that pre-market low. Remember, the marketplace to the T is not going to be designed so it's so easy, right? But based on those, day trading levels and whatnot, you can also use those for intraday ads to buy. Does that make sense?
Yeah.
Or profit on. If you're already profiting, let's just say like, based off top-down analysis, this is where you want to collect profits. But we broke down pre-market low hard, and then you see previous days low, like right here, above your first profit target. And you're like, oh shit, it might not hit my profit target, and it's already dropping right here. You can collect profits here too. You don't have to wait until it goes to the thing. Does that make sense?
Yeah.
So that's how you use the 5-day trading levels to your advantage as well.
Okay. Yeah, I think I'm good with the questions.
Yeah. Anything else?
No, this is pretty good.
Let me stop recording first, and then